Hello friends, welcome to the lesson. So, we have already discussed about the monetary policy, right? Now we will discuss about the Reserve Bank of India. So we will discuss this topic from the perspective of prelims examination. So what is the index? History of the Reserve Bank of India, objectives of the Reserve Bank of India, organizational structure of the Reserve Bank of India, Section 7 of the RBI Act 1934, functions of the RBI, very important, and what are the sources of income and the expenditure for the Reserve Bank of India. First of all, central bank. What is a central bank, right? So, central bank is the bank which is operating at the national level, right? And this is the supreme monetary authority of the country. The central bank is responsible for managing the entire banking system, for development of the entire monetary system, for ensuring that there is an equitable distribution of credit all over the country, right? So it is regarded as the highest monetary authority in the country, and it supervises, controls and regulates the activities of the commercial banks. Central bank is able to influence monetary and the credit conditions and the financial developments in a country. So monetary conditions, the availability of the money to the different sectors of economy, availability of credit to the different sectors of economy, and the financial developments. Financial development means the banking and the non-banking institutions. Their growth and development. The banking and the non-banking institutions and their growth and development. Now, coming to the Reserve Bank of India, right? So, this term reserve, what does this represent? This term represents the transaction where the banks, they deposit their money with the RBI as the reserve, right? So in the monetary policy we discussed that some variable reserve ratio, that is cash reserve ratio, is capped with the Reserve Bank of India, and at times the bank can also keep their excess money with the Reserve Bank of India. So because of this reserve, this word reserve came into place, right? So this is the origin of the word reserve. Now let us see historical development of the Reserve Bank of India and some more facts about the Reserve Bank of India. So it was set up on the recommendations of the Hilton-Young Commission. So Hilton-Young Commission came during the Britishers' time, and it recommended that there should be a central bank which can manage and develop the entire banking sector of the country. It was started as the shareholders bank with a paid up capital of 5 crore, right? So shareholders bank means there were shareholders who occupied the ownership of the RBI. That means it was a private bank. It was a private bank initially. It was established on 1st of April 1935, right? And it was established as per the RBI Act 1934. So RBI Act 1934, it provided for the establishment of the Reserve Bank of India, and as per this act, it was established in 1935. Initially, its headquarters were in the Kolkata. Later, it moved to the Mumbai. It was the first bank to be nationalized in the 1949. What is the meaning of nationalization? Nationalization means the transfer of ownership from private to the public hands. That means Initially, it was controlled by few individuals. Now, it is controlled by the government. So, the public sector or the government got the ownership of this bank. It has total 22 regional offices, and most of these offices are in the state capitals. So, let us see the preamble of the Reserve Bank of India so that we can see what is the major objective, and we can also see what kind of functions this RBI should be doing, right? So this I have taken from the preamble of the Reserve Bank of India Act 1934. Preamble means the objectives, right? The basic functions of the Reserve Bank of India are to regulate the issue of banknotes. So this is the first point. Issue of the banknotes or the currency, keeping of reserves with a view to secure monetary stability. So the second function is to keep the reserve. The second objective, rather, not the function, objective, right? Securing the monetary stability. Monetary stability means it includes stability of the banking system and the price stability also. And generally to operate the currency and credit system. Currency system means issue of currency, managing the foreign exchange, and credit system means availability of the sufficient credit to the different sectors of the society of the country to its advantage, right? So from this we can draw the major objectives of the RBI Act. So these are the major objectives. Apart from that, from time to time and at different places of the RBI Act, we can find there are more objectives of the RBI. So in totality, these are the objectives. This first paragraph we have already studied in the previous slide, where issue of banknotes, keeping of reserves, securing monetary stability, and operating the currency and credit system, they are the main point. Apart from that, having a modern monetary policy framework. So modern monetary policy framework, for example, now we have monetary policy committee. So earlier the monetary policy was the sole prerogative of the RBI governor. Now there is a committee. So this monetary policy framework keeps changing. RBI keeps bringing new regulations. For example, in October 2019, it came up with the external benchmark rate-based lending rates for the few sectors like retail sector, right? So these kind of new regulations keep coming up from the side of RBI. Next is to maintain the price stability. Price stability is very, very crucial. Rate of inflation has to be kept in a certain limit. Objective of growth, economic growth, maintain the macroeconomic stability. Macroeconomic stability means inflation, this growth, stable exchange rates, and the financial stability. Financial stability. Now let us see a couple of good terms, a couple of words that we have used. First is price stability. Price stability is very, very crucial. That means the inflation should be at an appropriate level. Inflation rate should be at an appropriate level. At present, if we see, as per the flexible inflation targeting system, the appropriate levels of the inflation are 4% plus minus 2% of the CPI. CPI means Consumer Price Index. So this is what we mean by the price stability. This is very crucial. Neither the price should be less than 2%, because in that case the businessman will not be interested in making new investment and the economic growth will falter. It should not be more than 6% also, because in that case it will adversely impact the poor people and the other actors of the economy. Next is the financial stability. The financial stability means that banks and the other financial institutions, they should operate properly and not fail or go bankrupt. So we have banks, and there are a lot of risks to the banks. the risk of not receiving the repayment from the customer. So for example, this non-performing asset crisis is going on, NPA crisis is going on. We can see in the last year many cooperative banks or small banks, they are also having the big problem that their big loans that they have given to the customer, they are not able to receive back. Therefore, their customers are also suffering. So we have this Reserve Bank of India always take care of the interest of the banks and the customers in such cases. The other financial institutions, that means NBFCs, non-banking financial institutions. So in the recent times, even the NBFC sector has been facing a big problem. This IL&FS crisis, this PMC crisis. So all of them are linked with the NBFC sector. And NBFC sector plays a very crucial role for taking the credit and the money supply to the remote level of the country. So stability of the NBFC sector is important. Other financial institutions also include the other developmental institutions which are operating in the particular sector, for example, in the housing sector, in the infrastructure sector, etc. Then monetary stability. Monetary stability means the stable prices. So price stability is part of the monetary policy. And confidence in the currency. Confidence in the currency means the appropriate value of domestic currency. That means the value of rupee vis-a-vis the foreign currencies like US dollar, it should be appropriate. Neither it should be appreciative, because if it is appreciated, then there will be impact upon the exports. The exports will be hampered, and if it is low, in that case our import cost will increase and we will face the imported inflation. So this currency should be strong. Now coming to the organizational structure of the RBI. So if we see in the organizational structure, the topmost authority is Central Board of Directors. Below that we have governor, then we have deputy governor, then we have executive director, and so on. This hierarchy goes on, right? So you can just keep in mind the top hierarchy, that is central board, then governor, then deputy governor, and the executive director. And for your information, these three, governor, deputy governor, and one of the executive director, they are also part of the monetary policy committee. They are also part of the monetary policy committee, right? So now if we see organizational structure, in this organizational structure, the topmost authority is the Central Board of Directors. And this Central Board of Directors, this is appointed by the Government of India in keeping with the Reserve Bank of India. So what is the procedure, who is the authority, everything is defined in the RBI Act 1934, and as per this act, it is the Government of India who appoints the members of the Central Board of Directors. Now in this Central Board of Directors, there are total 20 members, which include 1 governor, 4 deputy governors, and 15 directors. Apart from this central board, we have some of the local boards. This local board, they are located one each in the 4 regions of the country, including Mumbai, Calcutta, Chennai, and New Delhi. So all the 4 metropolitan cities, they are having one of the region local board, and each of the local board, they consist of the 5 members which are appointed by the central government. Friends, you might ask, sir, whether in the UPSC these kind of questions will be asked. Normally till now, if we see, these kind of questions have not been asked. However, in the last couple of years, this Reserve Bank of India has been quite in news because of different controversies regarding the governor, controversies regarding the tussle between the governor and the government. So because of these tussles, there have been a lot of news about the RBI. Because of these news, there is a possibility that UPSC can go a little bit into depth. So if that happens, in that case you can solve the questions. Otherwise, if we see the exam pattern till now, then we can say that this much depth is not required. But I will always say that you should at least go through my lectures, and in the examination hall you will recall something from the lecture, and then it will benefit you a lot. Next, acts governing the specific functions. So friends, there are various functions of the RBI, right? And RBI has a lot of power which it derives from not only RBI Act 1934, but also there are many other laws in the country which provide the power to the Reserve Bank of India. So Reserve Bank of India is drawing power from all these acts for their specific functions. Now you can ask a question, sir, do I need to remember the names of all these acts? The answer is no, you don't need to remember the names. But still, why I am discussing here, right? So I am not wasting your time. Why I am discussing over here? Because when you read the newspaper, in the news you will find the mention of some of these laws. So at that time you can correlate that thing to the lecture, and you can see that okay, that this particular power has been drawn from this particular act. Again, there can be question based upon the current affair from any of these laws, but in the static part there can be no question. Coming back, so there is a Public Debt Act or Government Securities Act which is proposed, and as per this act, the government debt market related power is entrusted with the RBI. Then we have Securities Contract Regulation Act 1956. According to this, it regulates the government securities market. Then we have Indian Coinage Act 1906. According to this, RBI governs the currency and the coins. Then we have Foreign Exchange Regulation Act 1973 or FEMA Act 1999. According to this, RBI has the power to govern the trade and the foreign exchange market. Then we have Payment and Settlements Act 2007. According to this, RBI has the power for regulation and supervision of the payment systems in India. Then we have Banking Companies Acquisition and Transfer of Undertakings Act 1970. According to this, there is a power of nationalizing the banks. So these are the different powers given by different acts. Now, Section 7 of the RBI Act. So this RBI Act 1934, it has given ample powers to the RBI. And RBI is an independent institution. It is an independent institution. It is independent from Government of India. So Government of India cannot interfere in the functioning of the RBI in normal course of business. However, this Section 7 has given some powers to the government in certain conditions. So because of those conditions, RBI is coming under the control of the central government, but in those under these particular conditions only. So this Section 7 talks about that. So normally RBI is an entity independent of the government as it takes its own decisions. However, in certain instances, it has to listen to the government. This provision in the RBI Act 1934 is contained in its Section 7. So this particular thing was in news, and we will discuss this separately as part of the current affairs. Here you just need to understand that in Section 7 there is some power given to the government, according to which RBI has to listen to the government. Now coming to the functions of the RBI. So what are the important functions of the RBI? This is very, very crucial. You should listen to this part very carefully, because in the previous years this part has been asked multiple times, right? So as we have already seen the objectives, the functions can be divided majorly into two categories. The first category is the monetary functions. So monetary functions means those functions which are concerned duly with the money, like the issue of money, quantity of money, control of money supply, etc. So these are the functions which are called monetary functions. Then we have general functions. In the general functions, supervision, regulation and development role is performed. Now we will discuss each one of them in detail. So these are the main functions. These are the main functions monetary authority, issue of currency, banker, agent, and financial advisor to the government, banker to the banks, regulation and supervision of the banking and financial system, management of the foreign exchange, regulation and supervision of the payment and settlement system, and the developmental role. So out of these functions, regulation and supervision of the banking and financial system and the developmental role, these are the general functions, and rest of the functions, they are the monetary functions. Now the first monetary function is the is that RBI acts as the supreme monetary authority of the country, right? So as the monetary authority of the country, it has to manage the monetary policy, right? And monetary policy has its own objectives. Maintaining the price stability, this is the primary objective of the monetary policy. So maintaining the price stability is the prime objective of the monetary policy, and supporting the economic growth, this is the secondary objective, right? So this economic growth has to be supported by ensuring the adequate flow of credit to the productive sectors of the economy. So agriculture sector, industrial sector, infrastructure sector, MSME, all of these sectors should get appropriate level of credit so that they can increase their productivity, they can increase their production, and ultimately the GDP increases, and when GDP increases, this economic growth can take place. Then we have financial stability. Financial stability, again, financial stability is concerned with the developmental of the banking and the other financial institutions. RBI formulates, implements, and monitors the monetary policy. Then this is very crucial function, issuer of the currency. So RBI is the issuer of the currency. So in India, RBI is the nation's sole note issuing authority. This is very crucial. So RBI gets exclusive rights to issue the notes in the country. However, the rupee 1 note is issued by the Ministry of Finance, Government of India, right? Rupee 1 note is issued by the Ministry of Finance, Government of India. However, the circulation of this rupee is done by the RBI. So printing is done by the government and circulation is done by the RBI in case of the rupee 1 note. Similarly, the rupee 1 coin also, they are also done by the Ministry of Finance, and the circulation is managed by the RBI. Along with the Government of India, RBI is responsible for the design and production and overall management of nation's currency with a goal of ensuring an adequate supply of clean and the genuine notes. So even they are designing, printing, safety, avoiding the counterfeit currency, everything is also under the domain of the RBI apart from the central government. Reserve Bank of India also makes sure there is an adequate supply of coins produced by the government and also destroys the currency and coins not fit for circulation. So ensuring that there is an adequate supply of coins, that is also responsibility for the RBI. It brings uniformity to note issue and keeps the public faith in the paper currency alive. So paper currency is different from the metallic currency. In the metallic currency, there was more faith because value of that metal currency was equal to the value which was mentioned. So we talk about the gold coins, silver coins, silver coins, they were having their own value. So even if the government don't repay the money, still there was a public faith because they can always go to the jeweler and get their money back in the form of gold or silver. But in case of paper currency, it is the guarantee given by the government that works, and this guarantee has to be this guarantee has to be managed. RBI plays a very important role by ensuring the public faith in this currency. This issue of currency is also called as, because of this, this RBI is also called as the bank of issue, right? So issue of new currency is the exclusive right of the RBI. All the notes except rupee 1 note and the coins are issued by the RBI. Rupee 1 note and coins, they are issued by the Ministry of Finance but circulated by the RBI. So issue is done by the Ministry of Finance and circulation is done by the RBI. It also exchanges and destroys all damaged notes. And do you know that for issuing the money, RBI keeps 115 crore rupees worth of gold and 85 crore rupees worth of foreign securities as the backup, and this is called minimum reserve system. So by maintaining 200 crore rupees assets into its treasury, RBI can issue any number of currency, but definitely this currency cannot be unlimited. This has to be in, keeping in mind the requirement of the economy so that money supply do not exceed a particular level. This system is followed from the 1957. So the amount of new money is based on the prevailing economic condition. So if this is a condition of high money supply, in that case the RBI will get back the money from the market and vice versa. And if there is, like for example, there is no money supply in the market, the money supply is very less, then RBI can go for issuing the new currency. Now, RBI also acts as the banker to the government. And under this role, it keeps the banking accounts of the government, right? So, for discussing this function, just take an example. You and me, we have the bank account with our bank. For example, I have the bank account in my State Bank of India, right? So, what are the functions which my bank performs? So, my bank keeps my bank account, right? My bank can also give me short-term loans, right? And my bank, it can purchase and sell some bills and currencies on my behalf. It can receive and make payment on my behalf. It can advise me on the economic matters. So all these functions are also done by the Reserve Bank of India, as it is the banker to the government. So the government has its account with the RBI. It gets the short-term loans from the RBI, and RBI also manages the public debt. The loan that is taken by the government from the public, that is also managed by the RBI. It also purchases and sells the bills and currencies on behalf of the government. It receives and makes payment on behalf of the government. It advises the government on economic matters like deficit financing, price stability, management of public debts. So out of this deficit financing and management of public debt, this we will discuss in the chapter of public finance. Price stability we have already discussed in the chapter of inflation, right? So can you see that as the banker to the government, RBI performs all these functions. Now, banker to the banks. So again, as a banker to the bank, every bank has an account with the central bank. Every bank can get the loan from the central bank. Every bank can deposit its money with the central bank. So bank deposit their reserves with the central bank. Bank can go get loan from the central bank. So whenever there is shortage of funds from all over India, the bank is not getting, any bank is not able to get any fund, it can always go to the RBI. In that case, RBI acts as the lender of last resort. So this RBI also acts as the lender of the last resort. Apart from that, there are many banks. Like in India, we have hundreds of banks, and there are a lot of transactions which are happening among the bank. So customer of PNB is issuing its check to the customer of SBI. The customer of SBI deposit that check of the Punjab National Bank into its own account. So in that case, PNB is supposed to give money to the SBI, right? So this transaction, this payment and settlement transaction between the PNB and the RBI, this transaction is called interbank settlement. So these interbank transactions are also regulated by the Central Bank of India or the RBI, right? So and enabling smooth, swift clearing and settlement. So the example that I gave, what is clearing and settlement? That means transferring the money from one bank to another bank because the customers have issued the check into another bank. Providing an efficient means of fund transfer. So you and me, we can always transfer the fund from our bank account to any other bank account, the bank account of any other bank, right? So this fund transfer, NEFT, RTGS, IMPS, all these happen through the regulation of the RBI, enabling banks to maintain their accounts with the RBI for purpose of statutory reserve requirement, that is the CRR, and maintaining the transaction balances, acting as the lender of the last resort, right? So whenever the banks are not able to get any loan from anywhere, it can always go to its own bank, that is the central bank, and the liquidity can be managed in this way. So you can see one UPSC question which appeared in 2012. The Reserve Bank of India acts as the banker's bank. It would imply which one of the following, right? So as a banker bank, what are the important functions of the RBI? Number one, other banks retain their deposits with the RBI. This is correct. RBI lend funds to the commercial banks in times of need. Yes, it is lender of the last resort. This is also right. RBI advises the commercial banks on the monetary matters. Yes, that very true. So answer is option D. Option D is the answer. Very easy question. Friends, if you are able to understand each and every concept of the economy in an easy manner, I am sure that you can solve any question of the UPSC. Next question. The Reserve Bank of India regulates the commercial banks in the matters of, number one, liquidity of assets, branch expansion, merger of banks, and winding up of the banks. So this information I have not provided to you, but through this question I want to provide this information to you, that yes, liquidity of assets, it can be mentioned, it can be maintained with the help of RBI. Bank can deposit their extra money with the RBI, or they can get the loan from the RBI, so that liquidity is managed. Banks have to get permission of RBI for expanding their branch. Merger of bank, that is also regulated by the RBI, and winding up of the bank, that is also regulated by the RBI. So because RBI is the regulator of the banking sector, these all functions are also falling in the jurisdiction of the RBI. So answer is option D, 1, 2, 3 and 4. Management of the foreign exchange, right? So we discussed that RBI draws many powers from the FEMA Act. So this foreign exchange or the foreign currency, they have to be managed by the RBI. So RBI regulates the transactions. So all the transactions, when we are paying any dollar amount, there is FDI which is coming into India, there is capital transaction which are being done cross border, FII, FPI, all these transactions are managed by the RBI. RBI buys and sells the foreign currency to maintain the exchange rate. This is also very crucial. So this concept we will discuss in the chapter of external sector. You just need to understand whenever there is instability in the value of the domestic currency, RBI goes for buying and selling the foreign exchange accordingly, right? So Indian rupee versus foreign currencies, their exchange rate can be maintained by RBI buying and selling the foreign securities. RBI is custodian of the foreign exchange reserves. So all the foreign exchange reserves are kept with the RBI on behalf of the government. So it is vested with the responsibility of managing the investment and utilization of the reserves in the most advantageous manner. So all the foreign exchange reserves which are kept with the RBI also ensures that it generates some income from these reserves. Managing the foreign currency assets and the gold reserves, right? So foreign currency asset means the investment which are done by the country into the assets of other countries, like IMF reserve, right, etc., and the gold reserves also. RBI acts as an agent of the government in respect of India's membership of the IMF. So India is having its membership of the IMF, and as part of the membership, India is supposed to have some money in the IMF account. So that role is also done by the RBI on behalf of the government of India. Then we have credit control function. This thing we have already discussed in very detail, that it controls the volume and the direction of the credit. Volume is controlled by quantitative tools, and Direction is controlled by qualitative tools. Then it is also the regulator and supervisor of the payment and settlement system. The Payment and Settlement System Act of 2007, it gives the power to the RBI to oversight to having the oversight on the payment and settlement system. So payment and settlement system means the system through which the interbank transaction happen, interbank clearing of the checks happen. So the example that I gave, we do NEFT, RTGS, IMPS, we issue checks on the other bank's account. So all these transactions are being cleared with the help of this payment and settlement system. In this role, Reserve Bank focuses on the development and functioning of the safe, secure and efficient payment and settlement mechanisms. So we have already discussed the monetary function. Now let us come to the general functions. Supervisory, regulatory and the developmental function. First is the supervisory functions of the RBI. It includes granting the licenses to the banks, controlling the new branches, right? So we just saw that UPSC has already asked the question on that. Inspection of banks, control over the NBFC. So NBFC sector is also very, very crucial. And in the recent times, when there is a crisis of IL&FS and this PMC bank crisis, we can see that NBFC sector management and supervision is also very, very crucial. Implementation of deposit insurance, this is also crucial. So this PMC bank and one more bank which recently became bankrupt, this actually shows that customers' interest have also been protected. So the customers deposit some amount in the bank, right? For example, 10 lakh rupees. Now when the bank goes bankrupt, at that time, what is the remedy available to the customer? So customer has an insurance of up to rupees 1 lakh. So that is possible with the help of the deposit insurance. Although in the recent time, it has been said by the economist that this 1 lakh rupees insurance is insufficient. 1 lakh rupees insurance is insufficient. Therefore, this amount should be increased. So the government is actively considering and thinking that this deposit insurance should be increased. But as of now, this is up to rupees 1 lakh. Then a regulation function. As the regulator and supervisor of the banking system, right? The RBI protects the interest of the depositors, ensures a framework for orderly development of the conduct of banking operations. So RBI tries to give support to the new kind of banks. So we have payment banks, small finance banks. So all these new systems are basically encouraged under this role. RBI objective to maintain the public confidence in the system, protect depositors' interest, and provide cost-effective banking services to the public. Right? So, sorry. So, in 2008, the world faced the crisis, global financial crisis. At that time, India's financial system was credited with one of the very trustworthy system. In India, none of the bank failed. So that was possible only because of the RBI's strong vision and strong foundation given to the banking sector. Right? RBI also prescribes broad parameters of banking operations and cost-effective services. That is also very, very important under the role of financial inclusion. Developmental role. So RBI performs wide range of functions, promotional facilities. It establishes new institutions like NABARD, IDBI, so that country's financial infrastructure is built. So these institutions, they operate for a particular sector. It expands affordable financial services, promotes financial education and literacy as part of the financial inclusion strategy. So these are the different roles you can see. Role of RBI in economic development, development of banking, financial institution, backward areas, economic stability, growth, proper interest rate structure and the miscellaneous. These are the role. Now see this question. Consider the following statement. This question came in 2001. Statement number 1. It is banker to the central government. Yes. It formulates and administers monetary policy. Yes. It acts as an agent of the government in respect of India's membership of IMF. Yes. It handles the borrowing program of the government of India. Yes. So answer is 1, 2, 3 and 4, option C. So very easy question.